what can you do now? And that's really look at your, if you haven't done this in a while, look at your um, vendor or supplier base and segment it between public and private companies. Obviously public companies, you could probably do things and get some of their financials because they're public in Google, but you want to have a methodology. Maybe you have your own inherent risk scorecard. But with private companies, it's very hard to get those private company financials. But if you know the mix, then you can kind of focus on, then look at, the criticality of those public and private companies. And of course, are they sole source, dual sourced, are they a preferred vendor, looking at your vendor's vendor, and perhaps have your if it's a major critical supplier, maybe you want to work with them and understand their tier base as well. And what does that look like? And then you want to look, number two, you want to review these financial statements, especially private, as we just noted during volatile times. They tend to fluctuate and have all sorts of stress and pressure under them. The other thing that you can do if you have an in-house team, or what we do is we do stress testing scenarios, so you can decrease by a certain percent. We did that in the height of the pandemic, where we took revenues down by a straight 15% across the board. And then we did, more appropriate allocations based on earnings estimates. So in some industries, they decreased by 30%. We also can look at pro formas. The other thing that we have that's been beneficial to clients is looking at their private company supplier, inviting them to self-rate, and they can also get benchmarking details on their peer base. And so for the first time, a private company can really get the details and understand their financial health rating and how they can benchmark to others, which they may not have done before. And it can be really expensive if you're using a consulting firm. Anyhow, you can also increase that supplier collaboration, as Mike suggested as well. You want to really lean in, ask the right questions. And we've got some questions in a couple of slides that we won't read through, but is a good takeaway. And so by leaning in, having them be transparent, ask the right questions on a number of levels, you can really help them and help you. And that leads to, more efficient working capital. Maybe you want to lean in and help that supplier or vendor. Can you adjust the payment terms? And also the days sales outstanding and days payable outstanding. So looking at from your perspective, but also your vendor or supplier perspective, if they're in trouble, there's ways to help them out. And so we've had clients, really do spot buys in the pandemic and do some other things. Perhaps they're sending people on site. And this all leads to building a better relationship and stronger resilience. The conversation doesn't have to be punitive, right? It could be about working with them, strategizing, leaning in, and really understanding, the data that you're looking at and how you can help them. So I think really using, the metrics and formulating questions to ask really can help you build that better business relationship. And so some risk mitigation and key questions that you'll get I think you'll get this stack of recording, have these kind of handy, and you can look at, the short term and the long term and really understand their debt to equity ratio, things like that, their product investment, what's happening with their dependency on financing. Is it from one bank or many?